So this is an illustration when the good is price inelastic. Okay, how do you make sense of this diagram? Okay, so for example, when your demand curve is inelastic, okay, this is your original intersection point, demand and supply E0, P0, Q0 is your equilibrium price and output. And when you impose a tax, all right, remember this amount would be your tax revenue, okay, or the tax that is incurred by both consumer and producer. Okay, but how do we know who has the higher burdens of tax? Okay, we got to use some logic. Okay, remember, okay, what is the nature of price inelastic goods? Okay, when we say that your good is inelastic, it simply means that for every increase in price, your quantity does not respond very much, right? Okay, and for this kind of goods, a very classical example would be habitual forming goods. Okay, like what? Like alcohol, like cigarettes. Meaning to say, okay, when you raise price, people who are addicted to alcohol and cigarettes will not be affected very much. They would maybe consume slightly lesser, okay, but not to the extent of the full amount of price increment, right? So they are deemed to be inelastic. Okay, so now let's link together this portion to tax. Okay, so when there is a tax imposed by the government, all right, the producer for alcohol and cigarettes, okay, they find it easier, okay, to pass the tax to consumer. That's why you see that consumer burdens is greater. Why is this so? Because all these are habitual forming goods. All right, the consumers they are addicted to these goods will be coming back for more and more and more. All right, so if the government wants to impose this amount of tax, I will just simply pass it on to the consumer. Okay, because they are addicted, by the way. All right, so they will still consume. They will consume lesser, no doubt, from Q0 to Q1. Okay, but I'm able to pass on the amount of tax to the consumer because they are still going to buy anyway. Okay. And moreover, there are lack of substitutes. No choice, I have to buy from you. Lack of substitutes. Okay, so you can actually see that when your demand curve is inelastic, your consumers actually bear a huge portion of the tax burdens. Alright, or rather, the producers can pass on a lot of the tax burdens to the consumer. Okay, because remember, indirect tax is imposed to producers. Okay, but depending on the tax burdens. Okay, while the producers incur a smaller amount of tax burden. Okay,